Hello everyone! In this video, we will be working on a strategy that is extremely simple, understandable, and can achieve high profit rates using only one indicator. If you're wondering if it's possible to make money with just one indicator, make sure to watch until the end of the video. I have no doubt that you will be convinced. I want to start right away. Before we start the explanation, I kindly request you to subscribe and hit the like button. As you can see in our first example, the single indicator we are using is giving a sell signal. After a few bars from the sell signal, we see that it is engulfed by a green candle labeled number 1, right next to the red candle. In fact, during this retracement move, we also observe an additional green bar labeled number 2. This formation is a clear indication of a valid retracement move. Afterwards, we again see a red engulfing candle that engulfs the additional green bar labeled number 2. We can enter a trade with the closing of this candle. We have achieved a clear profit, with the perfect fulfillment of all conditions. Let's look at another example. Once again, we are receiving a selling signal from the indicator. The red-colored candlestick, from which we received the selling signal, engulfs the following two green-colored candlesticks, thus creating a valid retracement movement. Once again, we had a successful trade, as always. When the reward ratio reaches 1 to 1.5, partial profit can be realized or the trade can be closed. This will be your preference. I would like to remind you, especially at the end of the video, I will explain a critical aspect of this strategy model. This way, we can prevent entering into wrong trades. Now we have seen a buying signal. This time, the valid retracement movement occurred with a single red candlestick, because it engulfed the entire body of the previous green candlestick. And later, the large-bodied green candlestick engulfed the red candlestick. That formed the engulfing candlestick pattern. Now, a trade can be opened with the closing of the last green bar. Please pay attention. During the trade where we opened the position when all the conditions were met, the price is not showing a tendency towards the stop-loss level, but directly heading towards the target. Let's look at another example of a long position. Once again, we see a buying signal. A two-part red-colored bar engulfs the green bar, and an additional very small-bodied red bar is formed. At the end, the green-colored bar we see engulfs the very small-bodied red-colored bar, forming a valid buying signal for us. It was another successful trade, and as you can see, the price didn't come close to the stop-loss level. Friends, now I will talk about the most critical aspect of this trading model, so please listen carefully. If you have any confusion, please ask your questions in the comment section. As you can see here, if a buy signal is below the blue-colored moving average line, we do not consider entering the trade. Here, as you can see, the selling signal is above the blue line, but since the indicated bar is below the blue line, we consider the selling label valid. Later, a valid retracement movement occurs above the blue line, which violates our rules because the retracement movement for a selling trade should also take place below the blue line. Let me summarize briefly. 1. The buy or sell signal label can be on the opposite side of the moving average line, but the candlestick indicated by the label must close on the side where the trade will be opened. 2. The valid retracement movement must also occur on the side of the blue-colored moving average line where we intend to open the trade. Goodbye. Until we meet again, take care.